So let's talk about the opening range break, more specifically, the opening range breakdown. So believing that a stock is going to continue to the downside, shorting a stock. I took this trade on Friday and I traded it with puts, so expecting NVIDIA to continue to the downside. But if you've been watching my videos, I'm going over all my favorite setups. The intraday breaking news, I did a video on that, the exhaustion capitulation gap reversal, the tight consolidation daily range break, the bouncy ball setup. And now we're going to talk about a stock that I think was in play. It didn't have earnings, it didn't have news, but what it is, it had a technical catalyst. NVIDIA got really beat up the day before, and it felt like it broke technically on the daily chart. And we got a gap down in pre-market on Friday, so I was looking for a little bit of continuation. It was trading on elevated volume, and it felt like a technical catalyst. And then it gave the opening range break to the downside. I got a nice move to the downside, ended up being a great trade, and I just want to go over it today. And here's proof that I actually took the trade, so I'm not just talking about this in theory like a lot of people do online. I took the 126 puts on NVIDIA. I took 20 of them, same day expiration, and made $1,486. It was an awesome green day. And I do have a Discord called the Alpha Academy. I trade live on voice every single day. And then I'm on voice saying when I'm getting in, when I'm getting out, and just basically breaking down the trade and what I'm looking at in general. If you're interested in checking it out, there's going to be a link in the description below. But now let's go over the setup and why I thought this looked pretty good to the downside. So it all starts with the daily chart. I'm a big fan of looking at the daily chart first. Don't get so caught up in the 2-minute chart and breaking down lower time frames like a 5-minute, a 15-minute, and forgetting what the daily chart is doing. It's all about daily first, and then have that top-down approach, break down the levels, and then I'm most importantly scalping the intraday price action and then just waiting for that range break if it does occur. So what happened the prior day? So on June 20th, NVIDIA had a big gap up and it sold off. I actually ended up trading a very similar setup on the 20th as well, a range break to the downside on NVIDIA. So there were two back-to-back days where there were nice downside range breaks on NVIDIA. I took advantage of them, but let's just go over the one that I took on Friday. So we had the gap up NVIDIA on Thursday, June 20th, sold off aggressively. This thing is very extended to the upside. Realizing it's very extended, it's due for a pullback. And even if it continues higher, it just needs to come in a little bit because it's gone too far, too fast. This felt like it broke technically, but knowing that a lot of sellers took control on this day, I'm leaning to the downside. And then Friday, it was showing some weakness in pre-market, and look at the consolidation towards the downside in pre-market below prior day low. So I was thinking that if this continues to stay below prior day low, then I think there's a chance for continuation, even if it's short-lived, because it's very extended on the daily chart. It feels like it broke technically a little bit. Sellers kind of took control the day before, so let's see if they can do the same thing the next day. And then it's just all about the price action. And a lot of times people will ask, hey, what is your opening range break? Do you wait 5 minutes? Do you wait 15 minutes? Do you wait 30 minutes? Really, I'm just waiting for the opening range, or I'm waiting for a low or a high to be set. And then whenever that lower high gets taken out, I'll take the trade. Ideally, it happens 5+ minutes into the day, but sometimes it can be on minute 10. It can be on minute 12. I'm not really paying attention to the time. It's more or less the setup of what's going on. And I will break that down on a 2-minute chart. So as far as the intraday, these are 2-minute candlesticks. What happened off the open? So we had a quick sell-off to the downside and then immediately bounced, and there's a nice push to the upside. Being that NVIDIA broke yesterday and the selling pressure was there, I'm going to be leaning to the downside. So the most important level to me now is going to be low a day, 125.73. So ideally, the trade is going to be that when we get back through that opening low, I want to take it just for a scalp. I'm a scalp trader. I'm not holding all day. I'm in trades for only minutes at a time. However long it takes to get back down there is when I'm going to take the trade. So it could be 10 minutes, 12 minutes, 15 minutes, 20 minutes. I have no idea. But I know that if there's some sort of fail rejection and then NVIDIA rolls back over and starts to consolidate under VWAP and then it breaks those lows, that's the trade that I want to take because I'm expecting some downside continuation because of how aggressive that pullback was the prior day. So I don't really have a set time in my head. It's just all about waiting for this level to get taken out whenever it does. And it just so happened to be that it got taken out around 9:50, so 20 minutes-ish into the day. As far as breaking down the candlesticks, had a big push to the upside. You know, it couldn't even get back to prior day low. Just such a weak bounce, even though it felt kind of strong. very quickly short-lived. Push up into just below 129, started to reject, get those wicks to the upside, and then it just starts to build below VWAP. And then as this starts to roll over, my mentality is thinking that if anybody bought the dip off the open simply just because they believed NVIDIA has to go up, it had the pullback yesterday, I'm going to buy the dip off the open, whether it be algorithms, independent traders, whoever it may be. They just position to the long side off the open because they think NVIDIA pulled back for one day and now it's got to go back up to the upside. Let everybody else jump in quickly off the open and I'll let it shake out, and then I will just take advantage of the move when it looks a little bit more clear. And that's what I did today. So I had to push off the open, kind of rejected under 129, started to fail, got under VWAP. And as you can see, just every single time it pushed higher, there's these wicks showing that sellers are taking control. And I'm such a fan of trading the 2-minute chart because I can kind of get in on a candle when it looks like it's going to break support, and then I just risk off the high of the candle. And this is the candle that I really like, 948, approaching that low. So yes, could I have gotten in earlier? Sure. But at the end of the day, I'm trying to keep my stop tight. And as long as it doesn't feel like a super chase, I don't mind kind of waiting for that area, because worst case scenario, if it flips over the candle high, I'll just get out of the trade. The loss isn't too big. But this is the candle that I like and the one that I got in on. So ended up dropping pretty aggressively, came to 126. I ended up getting short just right at that whole number, expecting it to not only get below 126, but also break low a day, 125.73. And if anybody is long off the open, just have those individuals maybe panic very quickly short term, hit stop losses, and then just ride that acceleration to the downside. Now, if it does that, I have no idea how far down it's going to go, but I'm just taking the quick move. Like I've mentioned many times before, I'm a scalper. I'm only in trades for a few minutes at a time. But I ended up going short right around 126, and the stop is going to be above the candle high that I got in on, so 78, 126.78, so risking less than a point. And then once it drops below 126 on volume and I get the accelerated move lower, once I get that pop in premium, I decided to take contracts on these because the volume was there and I thought the setup was good. So I'm always going to take contracts when I feel like those two things match up. Otherwise, I don't mind taking shares when maybe the volume isn't amazing or the setup isn't amazing. So having the flexibility of trading both, but I felt like the setup was good, the volume was good, so I wanted to take contracts, and I took 20. So I took decent size because I felt like the setup was all right. Get the drop below 126, really starts to speed up. You got the elevated volume. Once I get the pop in premium, I'm just protecting that entry. I don't want the trade to go red. Worst case scenario, if it comes back to my entry price and I get out, there's just a little bit of slippage, so it'll be a small loss, not a big loss. Got a nice drop on this candle, and then I actually got out when this candle got to about 124.50. I had no idea that this was going to be close to the low. I just knew that it was going on 4 red candles in a row, and I took advantage of about 2 of them. And whenever there's these big wide range 2-minute candles to the downside, and I'm in that trade, I'm just going to scalp out. So when it flashed below right around 124.50, I ended up just getting fully out of the position because every single time I try to hold winners, and especially when it comes to options, it just doesn't work. Got a really nice move in the premiums, and I'm just going to hit out and take those profits. And that's my breakdown of how I like to trade opening range breaks to the downside. Good example on NVIDIA. Appreciate you watching the video, and I'll see you in the next one.